And so all eyes are on whether the BSP will cut today amid cooling inflation and global trends. To help us try to make sense of things, we've got Metrobank Chief Economist Nicholas Mapa this morning. Good morning, Nicky. Good to talk to you again. Welcome to the program.
Good morning, Reg. It's good to be back.
So, as I was saying, not to give the ending away, but most analysts and economists are already pricing in a rate cut today. Inflation's been on the downtrend, but I guess the question there should be, what are we looking out for? Okay, let's say it comes to pass and they do trim 25 basis points. Is that enough? And what is there to look forward to in terms of the signaling of the BSP today?
Yeah, the very crucial meeting this afternoon. Market has sort of priced in that 25 basis point rate cut. I think, as you mentioned, 15 out of 16 analysts looking at that rate cut, largely because inflation in the Philippines is below target presently. And on top of that, I think they're also looking at the inflation forecast. So you have the BSP signaling that we are target consistent this year, next year, and the year after that. So over the policy horizon, looks like inflation is expected to be well behaved. However, these forecasts were, I guess, formulated before this whole Iran-Israel recent conflict. So we'll have to see. I think the bigger question this afternoon will be how those forecasts move. And if those move materially higher, then that would, I guess, sort of set up the expectation that, how many more rate cuts can the BSP roll out after today?
All right, that's the million-dollar question at this point. And as you were speaking, I just saw a breaking news from Bloomberg saying that senior U.S. officials are preparing for the possibility of a strike on Iran in the coming days. So that would be a major escalation, of course. We don't, of course, in a conflict, in a war like this, it's impossible to predict which way it would go. But what is the worry here for the Philippines in terms of inflation, in terms of oil prices, especially as I just pointed out, we are an oil importing nation?
Yeah, we import almost all our energy. And I think the fact that we need to bring in crude oil from that part of the world, any further escalation in the crisis will just simply push up oil prices higher or keep oil prices at these levels, of course, which would have a trickle-down effect to our domestic pump prices. Private transport is about 3.2% in the CPI basket, and public transport is about 1% in the CPI basket. So that will have some impact on the domestic inflation scene. So I think that's the main reason why people are watching this development. I think the president has indicated that they'll be trying to roll out as many measures as they can, not just on the subsidies, but I guess trying to ask their cabinet, the cabinet, to come up with solutions to a potential prolonged period where oil prices stay this high.
Do you personally think there's a bit of runway here, just because inflation has been on the downtrend, and the May data came in pretty good, actually, 1.3%, which is the lowest, I think, in over 5 years. Is that correct, if I remember correctly? In any case, the point being, it is quite low. And, with on the other side of it, you've got oil prices at about $75, $76 a barrel at the moment. We have seen it go as high as 90 plus. So do you personally think there's a bit of room here to maneuver?
I think today they do have some space, given the fact that currently inflation is below target. And secondly, more importantly, the inflation trajectory still looks like it's manageable. If they don't do a cut today, then, I guess we'll see if they still have space to do further rate cuts down the line in August or in October, as you mentioned. But I think currently they do have some space, given where inflation is right now. And I think you also mentioned, the concerns about growth, with GDP growth slipping below market expectations in the first quarter of the year. So you have, inflation within target now, next year, and the year after that. And you have growth slipping below market consensus or the government's own official forecast. So this, I guess, should give the government at least some space to cut. Further down the line, I think they'll have to go back and look at the data once again. It's a very fluid situation, but I think presently they do have space to cut today.
The growth target at the moment still about 6%, if I recall correctly,
Yes.
for the end
The
of
lower
the
end is 6.
yeah. So thereabouts, which is still a bit of a way away from where we are, but there has to be a lot of hustling to get there. Between now, so we're almost halfway through the year. Between now and the end of the year, how many more cuts do you think is appropriate? What would be a good number here?
Well, we do see them cutting today, but if the Fed does not move over the next few months, then I think this is probably it for the BSP. So our calculus is one from the BSP, and then after that they'll have to sort of move in lockstep with the Fed. But given the domestic data seen, I think they do have space to cut at least once, and then take their cue from the Fed thereafter.
That's I guess that's a difficulty of pricing in black swan events like a war, like all-out war and a conflict, escalating conflict. But
Yeah.
let's focus domestically for a second, Nicky, and I wonder if
Sure.
you could talk us through what investor and the business community sentiment is like in terms of this impeachment trial. You've seen the headlines, you've heard both sides of chambers, dueling and trading barbs at each other over how the process is being carried out and so on and so forth. But how is the investor community seeing it, and what are the worries there?
Yeah, I think if you just focus on the economics of the Philippine economy, it's still quite solid. We are still the fastest growing economy, or one of the fastest growing economies in the region. I guess everyone is faced with the Trump trade war as well as the now ongoing conflict in the Middle East. So we'll just have to find a way to, I guess, adjust to the current situation. But I think we're still in a good place. Inflation is still quite low, below target, and growth is still quite healthy, above 5%. So I think we just have to hunker down, try to get through this current situation, and I guess get our policy settings right. So BSP's first move is today. We'll see what they do.
So there hasn't been too much anxiety over the political noise, is what you're saying?
Yeah, I think if we just focus on the economics, it's still quite robust.
And then just very quickly, Nicky, you mentioned tariffs. Is there still a lot of anxiety on that? It seems to have died down a little bit from my end.
Well, I think that's the issue. It's always just hanging in the balance. You're not sure what Donald Trump will whip out overnight. He might come up with a new tariff schedule, or he might decide to implement tariffs immediately. So I guess it's just always there in the background. So we just, as an economy, we have to do our own homework, look at our own data, see how we can improve as an economy, and then we'll just have to. I guess that will improve. That will help us improve and be strong enough to face the global developments that we're seeing nowadays.
I think you're absolutely right. You just don't know what the new day will bring as far as Trump's policies go. Okay, we'll leave that there for now. Thank you so much for your insights tonight, and we'll circle back to you once we have the BSP decision later today. But for now, that was Nicholas Mapa, Chief Economist at Metrobank.